The U.S. holiday pattern, it's what we call an abnormality, all right? What that means is that it's an inefficiency where stock prices tend to rise before and after. This is the theory again. They tend to rise around a holiday, a market holiday where the market is closed. The pattern suggests that you do better than a coin flip versus looking at non-holiday trading strategies. I want to analyze this. I want to show you what the money calendar found and how I trade this pattern. I'm actually going to do a couple trades with this pattern here in the next few minutes. So the pattern is this. There are 8 holiday patterns that I follow. Okay, they are as follows: New Year's Day, Martin Luther King Day, President's Day, which is coming up, Memorial Day, Independence Day, Labor Day, Thanksgiving, Christmas. The only one I don't trade is Juneteenth. No other reason I trade it other than the fact that there's not enough data right now on Juneteenth as a holiday and whether that works pre or post holiday season. Now, most search engines, if you go out and you Google this or you chat GPT this, here's what you're going to find out: that trading through the holidays is accurate about 68% of the time. What in the world are they even talking about? First, they're not giving you any specific entry dates. They're not giving you any specific exit dates. They're not giving you any specific symbol to trade this on. Hey everyone, Tom here. Just like to take a moment to thank everyone for watching this video today. Each of these videos are a result of hours of research, and my team and I love to see the likes and all the comments from you. You know, everything we do here will always lean towards objective, rules-based pattern trading and lean away from hype, memes, and of course, emotional trading. Now, also to let you know, I've compiled all my articles, all my videos, and all my research into one place that you can access at any time. I also have special reports there as well. Just click on the QR code at the top corner of this video to become a member of Patterns and Profits. It's absolutely free. Once again, thanks for watching. That's where we're a bit different. So I want to look at the money calendar, and I want to show you what I found for President's Day. And this is stuff that you're not going to find anywhere else. So when we went into the money calendar, this is what we uncovered. We uncovered that buying QQQ, because this is the pattern that's been working for the last 10 years. Buying QQ on Monday and selling it on Friday before President's Day, right? You've got 9 out of the last 10 years that this worked, okay? I'm talking about buying it on Monday, selling it. Now, I know it's not the open on Monday, you know, and then, of course, we could play that, oh, if I would have bought it in the morning. Yeah, market's up a little bit since this morning. But again, what do we want to do here? We want to look at 3 different strategies. So here's a pattern that expires on Friday, and you can buy the call options and then again, close the call options if we hit a price target or if we hit a stop or if we hit Friday's close. Well, wait a minute. What's a price target? What's a stop, Tom? I'm going to show you. Same thing with put options. All right, I could sell a put option and close it if the Qs hit the target stop. Or I could just let it expire if I'm selling puts. So here is a 90-day chart of the QQQ. Notice where the price was prior to the open. Notice where I'm looking for this to go. It's interesting how it's up here around the 161.8% retracement of a larger pattern in the stock. And I noticed that this is the resistance. I'm going to call this target. Here is support. We'll call this stop, 138 down here. You basically have a 1-to-1. That's buying the stock. What if we bought a call option? So a call option, we have limited risk. We have a really, I mean, it's said unlimited profit potential, but let's be honest. After Friday, we're limited to Friday's expiration. But if we bought the calls, the 610 calls were traded around 7. All right, we'll look at them in just a moment. But buying them at 7, if we are at or below the strike price, we lose the $7. If it goes higher, our intent is to make money on this trade. we would need, if we got up here to around the 625 area, that gives me a double what I paid. We're not at 610 anymore. We're already at 615. So we're going to need to make some adjustments, but that's okay. Let's look at the options. So what I'm doing is I'm looking at buying a call option on QQQ. And what I'm going to be looking at is the options that expire on Friday the 13th. Where are my at the money calls? Remember, we're looking at 615 right now. So 615 is going to be my at the monies. So let's scroll on down. Let's find those 615s. There they are. There's your 615. Okay. Wow, this is better than it was on the at the monies are better. They're $5.87. If I was going to buy one of these right away, I would click on it. So hopefully don't want to chase this thing around, but let's submit this one, $5.98. Now it's okay, now I'm filled. All right, so I basically now own this call option for the cost of roughly $6. And again, what did I do? I already planned all this ahead of time. I've looked at that. I've looked at my, my call option area. I've looked at how much the 610 calls were 7, but that was with us at 610. They're a little bit less in price, but you know why? We've lost a little bit of time premium. And then also the market's being a little bit higher. That's actually moved volatility lower. That's actually great too. Holiday patterns, you can use the 68% rule, which is no rules. Just when am I getting in? When am I getting out? What am I doing? What are my profits? What are my losses? Or you could use a pattern that is a rules-based pattern based on real rules, real quantifiable data, and real potential profits. And that's what we're doing with the money counter. We're optimizing our specific start and stop days. All right. We're looking at different indices that we can create historical win rates. And by buying options, by using options, we're going to adjust that win-loss ratio and also our probability of profit.